welcome. Happy Hump Day, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group. And for multiple decades, we've been coming to you right here at KHNC, the Lion in Johnstown, Colorado, the Front Range, and of course KXXT here in Phoenix, delivering economics with attitude. I'm Joe Jaquint, CEO, 800-951-0592. That is our toll-free number. The physical delivery of wealth insurance, gold and silver. It is what we do, and we do it better than anyone. The website at allamericangold.com. You can do everything out there. We got the articles, the videos. We've got the shopping cart. We're on the shop online. You can do that. We've got our metals program that you can look into. I think is this a delivery month, Arlene? Am I right on that, the metals program? Yeah, so if you don't know about this program, I'm going to tell you, it's hard, right? And what I mean by that is everybody out there, you all know, whether you want to admit it or not, because let's face it, a lot of times we don't want to, right? When I know something and I don't want to do it, right? I want to live in denial for a little while longer, right? We all do that, right? We all procrastinate, and sometimes, the truth is just too much for us. But everybody, you all know, you need to have it, right? And just like this, and we've said it all the time, you don't put all your money into gold. That's dumb. Just like putting all your money into the stock market or putting all your money into investment houses or any of that stuff. You got to be diversified, but the thing is you got to have that wealth insurance. It's just like car insurance, health insurance. It's the same thing. This is what you do to protect your wealth against, we'll call them accidents. Why not? Right? We can use that word. The accidents, the bubbles that are out there. And the hard part is, hey, it's expensive. I mean, gold's up $6, over $1,200. Silver, nice day for silver today, approaching $1,430. Platinum, boy, I told you, I wish everybody could. All of you that could have got in, I hope you did. Platinum today hit $825. Remember, I put an all-out buy on platinum less than a month ago. And we're going to see a nice, healthy recovery in that market as well. Rhodium was like $2,300. Remember, that was a couple of years ago. I told you all to buy that as well. But it's expensive. The metals program, we created this program because not because I did it. Hey, so my company can make a bunch of money. We don't. Let's face it, we don't make a lot of money on anything we do because that's how we do business here, right? There's a reason why we only have a handful of employees because, you know what, we don't want to charge you more for your products. But I wanted everybody to have the ability to get some wealth insurance. You can do it for as little as $100 a month. If you can afford $100 a month or more, there is no limit. You can do as much as you want. And believe me, we've got people all over the place. $100, $150, $300, $500. All the way, we got people doing $2,000. You put a credit card on file with us. You tell us the day of the month you want us to hit the card, from the 1st to the 28th. Mostly, why do I say that? Because, there's only 28 days in February, and it gets too complicated for me, and I'm a simple guy. So you tell us the day of the month, the amount, and then you get 4 physical deliveries a year. So every quarter, we're going to total it up. If you're at the $100 a month, right, you're going to get $300 worth. Some people say, Joe, give it to me every other quarter, right, because they want a little bigger piece, a little bigger pile. We can do that for you as well. But we total it all up. and then we make one mass buy. Why is that important? Just like everything else, here we do volume discounts all the time. Well, the wholesalers, they do the same thing. So you're going to buy at the lowest price possible. And if you bought anywhere else, when you're coming in and you've only got $300, you pay the most. So look into it. If you haven't already become part of the program, go out to allamericangold.com. Along the top, you'll see the metals program. You can read all about it. Here's the other thing. I get you. Hey, Joe, I can afford $100 a month as long as things don't go bad. Right? As long as I don't need new tires on my vehicle, as long as I don't have the water heater doesn't blow up today or things of that nature. Listen, you can start the program, stop the program anytime you like. What does it cost to sign up? $0. What does it cost to cancel it? $0. What? How many fees are there? There's none. The only fee you'll pay is a small shipping fee. That's it. I can't even tell you how many people we had stop for 3 months and then pick back up and so on and so forth. Listen, it's the easiest thing you possibly can do. Go out to All American Gold or give Arlene a call, and we'll walk you through it. Patriot Radio News Hour. I know it. I hate to do it, but we got to talk about who's buying the debt and who's not next. 800-951-0592. Right now you got gold up 6 at 12.04. Silver's up 13, 14.27. Platinum's up almost $10, $821. Palladium's up 20. Rhodium's up 20. Good day in the metals complex as we start to watch all of this unfold, and a lot of big things happen in Treasury notes exploding. We now got the 30-year, the 10-year, the 7-year, all over 3%. The 5-year right there, getting ready to take out 3%. But even going all the way down to the 2-year, the 2-year yield at 2.81. And again, that's just going to pile up on the debt, add more to the debt levels, and we're kind of you're just now. Because remember, I've been telling you, everyone likes to use these baseball references when talking about where we're at in this economic recovery or where we're at in the Dow rally, and people like to use what inning we're in. We're in the 7th inning, because everyone says, hey, this is a late cycle recovery. In other words, hey, we played a lot of tricks, and boy, they played a lot of them. And pretty soon here, we're getting ready to head the other way, and we're seeing all of these classic top formations happening. We see it today. Listen, the Dow was up almost a couple hundred points yesterday, at least right now up almost another couple hundred points today, and the news is actually not good. Trade wars aren't good. Tariffs on products that are going to cost the American public are not good. But remember what I told you yesterday. This isn't a American's job tariff. It's not. Because if it was, we would just simply say, hey, we're putting a 25% at least tariff on. Why? Because your labor's so cheap and you don't have all the benefits that we give, like health insurance and Social Security, this, that, the other, and it's an unfair advantage, and we want the jobs here. Simple. That's not what we're doing. Hey, we're putting a tariff on until you promise not to steal all of our company's stuff when they bring the jobs over there. I mean, that's really what they're asking for. Just letting you all know. And then we start watching as this starts to play out. And, of course, we are in this trade war, if you will, with the Chinese. And yesterday, so the Treasury every month releases who owns what. In other words, we've got coming up here on $22 trillion worth of debt. And the Treasury lets us know who's buying it, who's selling it, who owns it. China, who, by the way, is the largest holder of Treasury. And you start thinking about all the possible scenarios of this trade war. Right? Scenario number one. The Chinese say, oh, we're so sorry. Did we steal your stuff? Did we? Oh, shoot. You know what? I can't believe we did that. Oh, did we make you turn over all your blueprints and all your manufacturing? Did we? We turned over you had to turn over your manufacturing thing. You know what? That was wrong. We're sorry. Right? You know what? We're going to fix that right away. Right. That's option number one. Right? And of course, that's the option, right, that the bubble traders want to believe, right? No, right? I mean, it could happen. I don't know. You know what? I don't know the Chinese. I don't. All I know is what I read. And no, you don't read about the Chinese on CNBC. It's not where they tell you what they're really thinking. You've got to go over to the Chinese English publications to learn. They have no intention of doing that. At least not that I've seen. And you do the old judge the book by its cover. Well, the cover pretty much has said, hey, that's not how the Chinese operate. And then when you actually read the book, guess how the Chinese really operate. We're going to steal all your stuff, and we're going to make you give up all your secrets. If you want to come in here, we got 1.3 billion people. You want to do business here? That's the price. You don't like it? Oh, well. Oh, well. Because guess what? We'll just call our other buddies over in Europe. They can make the same stuff you can. See if they like it. And again, this is how we get into trouble. Arrogance. Already, and I know we like to say, we've got the biggest economy in the world. Not really. Yes, in dollar terms, yes. And that's that's only going to last a little while, right? And I don't know the exact year, but within the next 5, and it may actually be less, but within the next 5, no matter how you do the math, China will be number one. They're already number one now because they actually use the most stuff. Okay, they actually use the most steel, and the most aluminum, and the most copper, and the most gold, and the most silver. Right? You name it, they use the most. Think about our car market. Right? We sell 17 million automobiles. That sounds like a lot. You know how many China's going to sell in, say, 10 years from now? I don't know, 40 million? But they already do about 20 million now. But 40 million? Right, we got 300 million people. They've got 1.3 billion. But nonetheless, anyway, that's option number one. Option number one, China says, we're sorry. We're sorry. Gosh, I didn't mean for that to happen. We stole that from you, really? Option number two, China says, okay, here's our retaliation, there's your retaliation, and China's already put tariffs on all the stuff we import. We've got another 287. We do that. And we bump them up to 25%, and we go on. Again, not very likely. Option number three is we get to where option number two is, and then the Chinese start using other methods. Now, today, they said, hey, listen, we're not going to devalue our currency. Right? We're not going to do that. No. And, of course, they can say that. Now, they've already devalued it 10%. So the 10% tariff on this $200 billion that we put on, China already devalued by that in the last 6 months. And they've already done that. Now, China will tell you, hey, it wasn't us. We didn't do it. The markets did it. Right? Which, guess what? They'll say it again. Their vice premier, their number 2 guy, came out today and said, hey, the economy here, we're having trouble keeping it stable. Now, remember, I just want to point this out. China grows at 6.5% a year. They're worried that the growth is going to go to 5, 5.5, right? Which we would give our left arm for, but that's what they're talking about. They're talking about a slowdown. Why are they talking a slowdown? Right, you hear the guys on our TV, the idiots here, China's in deep trouble. They got all kinds of problems. Right, because they wanted China to say they're sorry. They're not in deep trouble. Do they have problems? Yeah, they got problems just like the rest of the world does. But remember, everybody wants to do business with them. So they're letting it be known, hey, market, go ahead and let our currency fall some more. We're not going to do it, but we'll help you do it. Right? They know how the game's played. Oh, yeah, it's hard here. Right? We're going to lower interest rates and this and the renminbi fell. Whoops. Sorry. It's another way. Then the way that worries me the most. So that's another option. But the one that worries me the most is the one that we're going to talk about right now. So like I said, every month, the Treasury Department comes out and tells us who was at the auction. Now, we know every 90 days, what are we doing? Every 90 days, we increase the amount of dollars we need to sell every month by billions of dollars. Now, here's the funny part. Well, we're going to add $1 billion to this one, and we're going to add $1 billion to that one, and we're going to add $1 billion to that one, and $1 billion over here, and maybe, this one we're going to do $2 billion. Oh, wait, we're going to create this whole new one that didn't exist before, and we're going to start that at $10 billion, right? Next thing you know, you start doing the math. And you end up with, whoa, and we need to sell not billions, not tens of billions, hundreds of billions of dollars more every single month. And every 90 days, we increase it just a little bit. Little bit, right? Because we don't want to alarm anybody. But now we're starting to see who's not coming. And China, their holdings of U.S. Treasury bills, notes, and bonds dropped to a 6-month low, now totaling $1.171 trillion. This is being closely watched since jumping Treasury securities is viewed as one way that China could retaliate against the U.S. Now, remember what I said at the beginning of the show. What just happened? The 30-year, the 10-year, the 7-year were a fraction of a way from the 5-year, all going above 3%. Even the 2 years at 2.81. And I know for most of you are like, what does that mean? Doesn't matter. It means that it's rising, right? So every time the yields rise. Just think about this. That's billions of dollars it's going to cost us every single time. Billions. We're going to spend $500 billion on interest this year. This year. Rates aren't even at 2%. Right? What did they start the year at? Like 1.25%? Let me ask you something. I'm telling you, the debt is going to be $40 trillion in 2026. Matter of fact, go out to All American Gold. There's an article talking about the debt's going to be $99 trillion in 2048. Right? And I know that's a while away, right? 2048. I'll still probably be alive then. That's the scary part. Imagine what we're going to pay. But if the Chinese stop coming, how high are yields going to go, and what is the interest payment going to be? We're going to talk about that next.
This is the Phyllis Schlafly Report, a daily broadcast from Phyllis Schlafly Eagles, a national volunteer organization founded by Phyllis Schlafly and continuing to uphold her legacy by opposing radical feminism and representing a traditional conservative perspective in our nation's capital. Now, the president of Phyllis Schlafly Eagles, Ed Martin.
If there is one thing all conservatives can rally behind, it's our beloved United States Constitution. This document was crafted by some of the most intelligent and God-fearing men in history. It has stood the test of time and afforded our land an unprecedented measure of peace and prosperity. Through it, the natural spirit of innovation and freedom residing within all people has been unleashed for the betterment of society. This is a fact no conservative denies. However, there are some conservatives who are being lured into betraying this fundamental principle of conservatism. The trap they are being lured into is called a Convention of States. The Convention of States Project is an organization with dubious financial ties which seeks to convince conservatives to favor a constitutional convention through Article 5 of the U.S. Constitution. Article 5 gives two methods by which amendments can be introduced. The first method is where Congress proposes the amendments and then sends them off to the states for ratification. That method is the one we have used for 27 amendments, which we now have. The other method is where the states ask Congress to call a constitutional convention to propose amendments. This method has never been tried in all of American history. The Convention of States people make the convention method sound great by promising that the amendments from the convention will call for a balanced budget, fiscal restraint, and other such conservative favorites. However, the chances of that actually working are remote. Many constitutional scholars, including the late Supreme Court Chief Justice Warren Burger, have agreed that a convention could not be limited to only one conservative topic or amendment. To be fair, there are some lawyers who disagree on this. But what does that really mean? All that means is that there's enough confusion about it that the Supreme Court will be called in to settle the dispute. Do we really want to bet our Constitution on the will of the Supreme Court? Don't be fooled into gambling with our beloved founding document. Don't fall for a Convention of States.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Anyone pushing for a constitutional convention doesn't have a full appreciation for the brilliance and beauty of the original document ratified back in 1788. At phyllisschlafly.com, you'll find all kinds of reasons why a con could be a disaster for the American way of life. Check out phyllisschlafly.com and join us again next time for the Phyllis Schlafly Report.
800-951-0592. And I just want you to really understand, right? And again, these are all classic signs of bubbles. And they always say, oh, we never saw it coming. Right? Wall Street wants to pretend that the deficits aren't doing what they're doing. And here's the sad part. I can't find one person who thinks they're actually going to stop rising. Right? It would be one thing if we just stood here at $1 trillion. Right, $1 trillion a year, the small number. By the way, the number year over year, which is really a great way of looking at the debt. The United States, over the last 12 months, had to sell another $1.43 trillion. Right, so when they talk about the debt's only $1 trillion, it was $1.43 trillion over the last 12 months. Just to give you a little perspective, the Russians are done. Right now, they didn't hold a lot, but it's $100 billion gone. The Chinese and the Japanese have stopped. Right? China's been sitting. As a matter of fact, China held more debt in 2013 than they do today. Now, they have hit a 6-month low. Will they go further? I hope not. But here's the problem. We don't need them to go further. We actually need them to what? Buy more. And they're not doing it. And then you start to look at why did the yields just jump all of a sudden? I mean, did you notice? On Monday, the only thing above 3% was the 30-year. 2 weeks ago, none of them were above 3. None. You know, I don't know why, because the Treasury came out and said, uh-oh. Don't know if it's a sign or not, but they're buying less. Now, it could be a, rounding error when you're talking about $1.1 trillion. Or it just could be the Chinese are saying, hey, just to let you know, we just did a little bit. Just a little bit. We could go bigger. Could you imagine? What if they announced they were going to do what Russia did? Remember, Russia, they dumped $100 billion in a couple of months. And people got a little freaked out about it. What if they said, hey, you know what? We're going to do a different kind of quantitative easing. We're going to drop them $50 million a month every month for the next year. It would be catastrophic. You'd be sitting there looking at interest rates, probably 4, 5, maybe 6%. That would essentially double the debt, right? Instead of $500 billion, we'd be paying $1 trillion, which would take the national debt, right? Instead of talking about $1 trillion, we'd immediately be talking about $2 trillion. And this is why you need to have wealth insurance. Because what does it insure against? Right? We know life insurance insures against what? You passing. Car insurance insures against you getting in an accident. I'll give you a great example. Right now, I've got a rental car because my Buick's in the shop getting the door fixed because a young lady hit my parked car in a parking lot. I know, it's crazy. It happens. Right? And I've got insurance. And guess what? So did she. It saved me from having to come out of pocket to pay for my car. Saved her, same thing, right? You pay. In my case, I got my wife, myself, my kids, right? We pay. I'm going to lie to you because I don't know. And I know I should, but I don't. My wife does it. $300, $350 a month. A month for the insurance. Same thing. My wife reminds me all the time. You're worth more dead than alive. Right? She lets me know. And she's like, you know what? You're not worth very much alive, and you're worth a whole lot more dead. Right? Arlene, my ex-husband. Right? You said you know what I'm talking about. And you pay a monthly fee for that insurance. This is the same thing. Now, you can sign up for the metals plan and pay your monthly fee that way. Or you can just buy our specials as we do them, and you just start putting it away. You're insuring against the dollar, because that's what they use our financial wealth for. And there's times when you need to do it in more than others. And we're in one of these things where it's shocking. Right? Wall Street's acting like this is somehow, right? I'm seeing the United States is decoupling from the rest of the world. Everybody else is having a hard time, but the good times are here for us. Listen, I know it's hard to understand a little bit, but all we did is we just went hundreds and hundreds of billions of dollars more into debt to try to pretend. And everybody, and I'm sorry, but the good times won't be this good next year, and they'll be even less good the following year. And there's going to be the price to pay. In another, week or so, the central bank's going to raise rates here. All of your minimum payments on your credit cards go up. Anybody that's going to get a car or a home or any type of a loan that requires a monthly payment, we're all going to be paying more. At the same time, we've hit all of these consumer goods with a 10% tariff, right? We know we're going to pay more. And they'll keep pretending like there's no inflation. And the interest that we have to pay to support it keeps rising. And now the Chinese, at least for now, they haven't threatened to do it. But everybody knows they can. And I think this little announcement from the Treasury, that was just China's way of, hey, here's a little reminder. We just did it by a little bit this time. Patriot Radio News Hour got a great special coming up for you next. We actually got some product first time in like a week. And then we're going to talk about where the debt is really headed. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. And I've been talking about the supply problem in gold and silver. And I've been doing this a long time. And we get them. And all of you that have listened for any amount of time, you know what I'm talking about. Right? We've gone months with no silver before, weeks with no gold, right? And I say no gold, that you'd have a few of this or a few of that, but no quantities really to speak of, and you always had to buy what? You had to buy the higher grade stuff to find anything. And then we hit a period where, I'll be honest with you, one of the first times I've ever experienced it. Matter of fact, it is the first time where we had so much product that allegedly nobody wanted, right? Nobody wanted any wealth insurance. I had old gold everywhere. Silver was everywhere. I didn't even have to call and ask, hey, what you got today? And over the last 3 months, everything has disappeared. Every show this week, what have I said? Well, we really don't have anything today, right? I don't have any of this. I got some junk silver. Today, I have 51. And I know it's an odd number, but that's what I've got. 51 $20 gold pieces. Here's how we're going to do it. Right now, they're at $13.40. You can see where the premiums have gone. 1 through 4, you're going to save $15, 13 and a quarter. Pretty good price. So really, historically, that's a good price. And I know over the last 18 months that's high, but that's a good price historically. 5 through 9, $13.10. It's an even better price. 10 or more at $1,295. Keep in mind, there's 51 available. We have product in both Phoenix and Colorado. So if you want to come get them, you can do it today. 1 through 4, 13 and a quarter. These are U.S. $20 gold pieces. These are the old ones, 1866 to 1907. Most of them are lives. There's a couple of states. But these are all back when our currency was backed by gold, where the central bank did not have the ability to debase the currency. Legal, lawful, constitutional tender. You can buy these, sell these, trade these, and not have to be 1099. It is the most private way to own gold, period. 1 through 4, 13 and a quarter. 5 through 9, 13.10, 10 or more, $12.95. Now, I'm not going to tell you who it is that bought them. Right, who bought all this stuff? You got to. I mean, this wasn't thousands of dollars. This wasn't even millions. Someone spent billions of dollars and bought it all. What are they getting ready for? What do they already know that you don't? How about this one? At the moment, we are now $11 billion away from 12.5 or 12, 21, dyslexic, $21.5 trillion in debt. Now remember, back in January, what did I tell you? That's going to be $22 trillion by the end of the year. And guess what? It's going to be $22 trillion by the end of the year. We've been averaging more than $1 trillion a year in debt since 2009. Now remember, they're telling us about this great prosperity. But maybe what it really should be called is temporary prosperity, right? Created by what? Exploding debt. Not prosperity at all. And here's the problem, is eventually you got to start paying for the debt that you went into. We've added well over $10 trillion in the last 10 years. And now we're starting to have to pay for it. And guess what? The Treasury yields are just getting started. Remember, I told you this isn't inflation or deflation. It's stagflation, where your wages really aren't growing. And I know they grew a whole 10 cents last month, double. I know, right? $39 in your Social Security check, and that's really going to help you. And you're going to see all of the foreigners doing exactly what the Chinese and Japanese are doing, which is at best not adding, at worst flat out selling. And the path that we're on, the CBO, which you know how bad they are at predicting, and they're not overly pessimistic. Listen, they've been smoking the marijuana and got the rose-colored glasses on when they calculate that. I'll tell you what they have to say about our long-term chances. 800-951-0592. Wealth insurance is what we do. Listen, you can get ready or not. It really, I mean, does it matter to me? Not really. Is it going to matter to you? You bet it will. 1 year ago, the debt was $20.1 trillion. As of October 1st, 2017. On October 1st, 2019, the deficit is going to be 21.5 something trillion. And hopefully we don't get one of those big days in between where it may be closer to 21.6 trillion. But you can understand that's 1.4 trillion, maybe 1.5 trillion in a year. Now the CBO, which remember the CBO 6 months ago said we weren't even going to hit $1 trillion of the small number until 2021. We're probably going to miss it this year by a little bit. We're not missing it next year. They're now saying in 2048, the U.S. debt is going to hit $100 trillion. Now, I'm going to be 78 years old in 2048. But I promise you this, we will probably break the 100 trillion mark well before that. And my guess is before that happens, you'll be seeing a whole new currency. Now, am I talking about Venezuela? Gosh, I hope not. Hope not. But could you imagine, even if the Fed was saying 5% inflation? Because you know what that would really mean. Inflation's really, 15 or 20? I mean, are we going to lop a zero off? I'll tell you this. It's going to be some form of a digital one. I believe that wholeheartedly, and it is going to cost you dearly. It's going to cost us all dearly. This is what happens when you go into debt. Right? We know this. This isn't news. You know, and I keep trying to let all of you know we are the children and the grandchildren. I'm sorry. It's here. And I know you don't want to, I guess you don't want to focus in on it. I get it. I don't either. But we're doing something. Remember, think about what they're all writing now. Now they're all doing it. J.P. Morgan, the latest. This is unprecedented what we're doing with the debt in relationship to what we say the economy is. In other words, what they're really telling us is this is an economy of make-believe. All we did was go into huge amounts of debt to get just a little bit of growth. 800-951-0592, 5120, volume discount supply. Take the time, put them away. We'll see where the yields in gold and silver are come tomorrow. Take care. Have a great rest of your hump day.